keeping your money idle? If you're not investing, you might be putting your financial future at risk. Today, I'll break down why you must invest, where to invest, and how to build wealth over time. Stay with me till the end because I'll also reveal the best way to beat inflation and secure your future. Let's dive in. Why should you invest? Before we answer this, let's look at what happens if you don't invest. Imagine you earn 50,000 rupees per month and spend 30,000 rupees on daily expenses, housing, food, transport, etc. The remaining 20,000 rupees is your surplus, which you simply keep as cash. Over the next 20 years, your income will grow by 10% per year, but expenses will also rise due to inflation at 8% per year. Let's do the math. After 20 years, you would have 1.7 crore rupees saved. Sounds good? Not really, because with inflation still rising, this money will last only 8 years after retirement. So what will you do after that? How investing helps grow your wealth. Now let's see what happens if you invest this 20,000 rupees every month instead of keeping it idle. If you invest in an asset with 12% annual returns, your savings at the end of 20 years will be 4 crore 26 lakh rupees. That's 2.4 times more than simply saving. Now you can afford your dream home, a comfortable retirement, and financial security. No investment 1.7 crore rupees versus investing 4.26 crore rupees. So now that we know investing is a must, where should you invest? Let's break it down. Where should you invest? There are 4 main asset classes where you can invest. Fixed income instruments, low risk but low returns, 5 to 9%. Examples: fixed deposits, government bonds, corporate bonds, best for safe, stable growth equities, stocks and mutual funds. High potential returns, 12 to 15% compound annual growth rate. Best for long-term wealth creation. Examples: blue chip stocks, index funds, equity mutual funds. Real estate generates rental income plus appreciation, but requires high capital and is not liquid gold and silver. Commodities, safe haven investment, good during economic crises, historical returns, 5 to 8% CAGR. What's the best investment strategy? So where should you invest? The answer depends on your risk appetite. Here's a general recommendation. Young professionals, high risk tolerance, 60% equities, 20% fixed income, 20% gold and others retired individuals, low risk tolerance, 80% fixed income, 10% equities, 10% gold. Diversification is key. Spreading your money across different asset classes reduces risk and maximizes returns. Things to know before investing. Key investing principles. Higher risk equals higher potential return. Fixed income is safe but may not beat inflation. Equities are great for long-term growth. Real estate requires high capital and is illiquid gold as a hedge, not a high-growth investment. Now that you know why investing is essential, it's time to take action. Start investing today and build a secure future. What's your current investment strategy? Comment below. Like this video, smash the like button, and hit subscribe Investor Owl for more financial tips.